Hello and welcome to The Print. I'm TCA Sharad Raghavan. And now, just recently, we got a new income tax bill. It's a draft bill. The finance minister laid it on the house of the Lok Sabha, and it has been sent to the parliamentary select committee for review. But we have access to the draft, and now to discuss all of this, we have with you Mr. Samir Kanabar. He's going to tell you about what is in the bill, what is new and different. He's a partner with EY India, and now there's a lot that there is to discuss about the bill. So thank you, Mr. Kanabar, for joining us.
Thank you for having me and welcome to all the audience. We'll be happy to speak about the new bill.
Thank you. And so, Mr. Kanabar, from a lay perspective, what is different in this new bill that was not there in the old bill, and that is something that people should take note of?
So let me give you a perspective and then sort of walk you through the journey as to what's the existing law, why there was a change required, what efforts have gone behind all this to make a change, and then what's the change. Right. So as of now, we have 6 decades old law, 1961 Income Tax Act. It was sort of laid out at a point of time when India had different needs. India was under different circumstances. So, for example, it was coming out with the laws which wanted to develop certain regions, whether northeastern regions, maybe certain northern regions where there was less development. So it was more to then at that time to focus on development. Then there was a need to create more exports. So a lot of export incentives related provisions were brought in to promote India as an export hub. So the law has sort of always evolved based on the situational requirement at a given point of time, and every time the law was amended, new sections were brought in. People used to sort of find some loopholes which were being plugged. So again, some laws were being brought to plug the loopholes. So if you look at law, it is quite a kind of a book which is so complex and which has so many cross references. It becomes difficult for a layman, forget a layman, but even a professional to sort of read through and make any interpretation out of it. And that's why we have so much of litigation on tax. We are told that there are around 2 million cases which are pending for litigation in the courts at various levels, right? So the need was felt, and of course we made an attempt somewhere in 2009 to bring direct tax code. A lot of consultations were happening at that point of time. The direct tax code at that point of time was a joint effort between the revenue and the industry or the professionals or the business, right? And then basis that the law was brought in, but there was a lot of there are a lot of tax changes which are brought in the new law at that point of time, and then I mean, it never got enacted, and the direct tax bill, direct tax code bill, lived its life, and then it died its own death because every bill has a life, and if it doesn't get enacted, then automatically it gets finished by its own period. So we made an attempt, and that was an unsuccessful one. So now an attempt was made under the chairmanship of Mr. V.K. Gupta, the chief commissioner. The idea was to sort of evaluate first whether there is a need to bring in any new law, and if so, then what should it look like, or what should be done. So a lot of online inputs were requested by this committee. We are told that around 20,000 odd inputs were provided online, and basis those inputs, some internal report has been prepared, which is of course not made in public. But it seems that yes, basis that it was decided that we need a new law because this law is not serving the purpose. So the philosophy of this new law is to be, and as we saw recently in the finance bill, the budget to 2025. the whole importance is now on economics, right? Whether we are fiscal deficit, whether what is our the borrowings to GDP ratio. So the whole dynamics or thinking has changed in terms of revenue. And obviously now we are in an age where we are in quantum computing, we have artificial intelligence, we have e-commerce, we have a lot of digital assets, we are talking blockchain, right? None of this sort of were feasible to be sort of designed in the existing law. So there was a need to have a template which sort of creates a kind of a body or a law which allows the new age laws to be imbibed. So new template has been created. It has been sort of simplified. We have been told that there are around 140 tax officers who were deployed, and they have spent around 60,000 odd man hours in drafting this new bill, basis the comments that were received, and that is where we have this new bill. The new bill, as we speak, there is no policy change. There is no rate change. Basically, it's more of design, as we are talking, and just to correlate, to give you a simple example, we talk about EVs and the IC combustion vehicles.
Yeah.
Now, essentially, the EV vehicles are a new platform by itself, right? And they are recreated, right? You can't just transition existing vehicles into EVs. So that's where we can do a correlation to say that this new bill is also something to meet with the new age where we are. And hence, a new template was required, which then is able to bring in new laws. So, right now, no changes have been done from policy, no rates, everything is being simplified. The number of words kind of that are used, we are told, are almost now 55% of the original act. The number of sections have been reduced, more schedules and more examples have been given, more tables are being prescribed. So it is more simplification, more ease of understanding, and obviously, as we are dissecting, the devil always lies in detail, as we say. So as we dissect and as we are reading, and of course it's 600 plus pages, so it takes time for us to sort of dissect. But as we are gradually dissecting it, we are seeing some changes which we'll discuss. But that's the whole background, and that's the whole perspective as to what it was, what was done, and where we are today.
Right. Thank you for that. But so some of the changes that you mentioned, which would you say are the most substantial ones that taxpayers should take note of?
Good. So let's look at changes, maybe in three or three, four different perspectives. One is personal tax. Second, we look at the corporate tax. Third, we look at some compliances, etc. Right? Now, personal tax, again, there is no significant change. As we said, old tax regime is there, new tax regime is there. All changes that were announced in the finance bill, the new slab rates are already there. So everything that was there in the finance bill is also incorporated into this. Nothing is missed out. There are one or two small things which don't matter much, which are missed out from the finance bill 2025 into income tax bill, but otherwise largely everything is imbibed. Now, so for, as we are talking from personal tax perspective, everything is almost there. What they have done in personal tax is that, section 10 had all exemptions, then salary was under different section. So now they have brought in everything in one single chapter, salary chapter, where all exemptions, all benefits, the entire taxability is under single chapter, right? So it has been made now easy, and people don't have to fumble. People don't have to go and search where what is mentioned and what is being missed out, not missed out. So you are able to easily capture everything in one chapter, and you are able to see through in one go. So that is from a personal tax perspective. From corporate tax perspective, we see some changes which we are not sure whether they are intentional or they are slippages, or because you are drafting a new law, there are 150 officers who are involved, so it is possible that there could be some slippages. It is possible that something may get unintentionally missed out. So we are not sure whether it is purposeful or a miss out, but today, if you look at from a corporate tax perspective, if you have a multi-layer corporate structure, right? So you have a holding company, you have a subsidiary, and you have a subsidiary below that, right? Which is possible. For example, large conglomerates, whether you are in infrastructure or you are a big business house, you may have two or three different tiers, right? Now, today, if subsidiary at the bottom is declaring dividend to its holding company, and in turn, if holding company is paying again dividend to the main parent company, then the holding company which is receiving dividend from the bottom subsidiary, if because it is in turn declaring dividend to holding company, it is this in dividend income is not taxable, right? It is seen as a pass through. So it's taxed only at one layer, which is at the parent company layer, but multiple dividends are not being taxed. Now, this law which has come in, sort of again, in companies we have two tax regimes. We have a 22% tax regime and we have 15% tax regime. 15% tax regime is for manufacturing companies which were newly set up before 2023, and 22% regime is those who were old companies who migrated from a higher tax regime to 22%. Now, this pass-through status of dividend is available to 15% tax regime companies. So if you are a 15% tax regime company, which is a manufacturing company, then this pass-through which I just described is available. But to a legacy structure where you are not under 15% but 22%, this pass-through status is not available. So dividend gets taxed at every level, right? So this becomes a huge challenge.
This is in the as per the new law. This was not the case in the older one.
Absolutely, this is in the new law, right? So this is something which has come in the corporate law. Similarly, there are foreign airlines and foreign shipping companies who were being taxed on a presumptive basis, and they did not have option to pay tax on a net basis. So presumptive basis, the way it works is that your air freight or your freight income for airline or shipping company, uh, a deemed profit is applied of say 7.5 or 10%, and on that profit you are taxed, irrespective of whether what profit you have made or whether you have made a loss actually. So now they have amended the law, which is good, to say that if you are a less profit making company or a loss making company, then you can go under a net basis and you will not be taxed on a deemed profit. So it's a welcome move, right? So there are some of these changes which have also brought in to sort of benefit, and there are some slippages as we believe which may get corrected through representations. Next, so we talked about personal tax, we talked about corporate tax. In terms of compliances, we see that in terms of virtual digital asset, right? So of course,
Crypto.
cryptocurrencies, blockchains, yeah. So what have we have been told is that if you are transferring any virtual digital asset, then you have to obtain a tax NOC from the tax office. After obtaining an NOC, you can transfer. So today, suppose if you own shares or you own any asset and you want to sell that asset, all right, and if you don't have any outstanding tax liability, then you can just transfer, and that's the end of it. But obviously, if you are transferring any asset but you have outstanding tax liability, then today you have to get an NOC before you transfer it, but otherwise you don't have to get it. Now for virtual digital asset VDA, irrespective of whether you have any outstanding tax liability or not, you have to obtain a tax NOC, right?
And this
So
means just simply buying or selling a crypto, you need to get an NOC
yes,
each time.
each time, right? So that's the kind of stringency they've brought in. Of course, I'm not sure whether it is intentional or unintentional. Seems to be intentional, but we'll have to see what happens through representations. Similarly, many a times when you are making payments, you have to deduct tax or withhold tax. Now, it is possible that the person who is receiving the income, he may not be actually maybe incurring loss or may not be required to pay tax, and still if you deduct tax, then that company or that person has to claim refund, which you will get after filing your return. So now they have brought in a law that in all cases where you are withholding taxes, you can make an application to the tax office, and you can obtain a lower withholding tax certificate, right? And as a result, if you are issued that lower withholding tax certificate or a nil tax certificate, then the payer will not withhold any tax, and that sort of saves you the hurdle of claiming refund of the taxes withheld, right? So these are some kind of changes which have also come in. We are still reading the law. Maybe there will be something more which will come up as we go through, but this will give you just a perspective.
Right. And the other thing that I was reading, and now when it comes to income tax, one of the big painful areas that people face is, of course, harassment from tax officials. That's their main complaint. So I looked into the sections on search and seizure, and those have remained largely the same. And those have not been diluted or made any easier. And in fact, now it says that if if a tax official comes and does a search, then you also have to share your computer password with them. Uh, and that seems to be a new thing. So, I mean, what is your take on that?
Yes, you're right. So today, what was happening is that if search or surveys were being carried out, a lot of data is now online, digital, on cloud, a lot of data is on your mobile phone. And there has always been kind of a dispute as to two things: whether as a tax officer, can you ask the taxpayer to log in with all the password and open that data for your examination, or you cannot ask, right? And second is, of course, uh, whether the data that is there on your mobile phone, whether it is WhatsApp or wherever, whether it can be held as a valid evidence, even if you are able to get such data, right? And then courts have been taking differing view that these are all personal information, so whether one can ask the taxpayer to provide or not, and that itself ends up in litigation, right? Whether you can access or not. And second is, and of course we now have digital protection laws, or the bill which will become an act, so maybe we'll have some guidance from there, but that issue remains. And then the courts have been not very clear as to what data is there on mobile phone can be used as an evidence or not. So to cope up the tax laws with the new age, as I was telling you earlier, there was a need felt that we now need to include electronic and digital data in digital form, so that the revenue authorities, if they are carrying out the survey or search, then they do get a right to look at that data, analyze that data, and also then sort of use that data as an evidence. So with that in background, the new tax bill has brought in this amendment to bring in the electronic data, whether it is in cloud form or whether in any digital form. It can They can ask the taxpayers to log in with the password, and then they can look into the data and then use that data, right? So those kind of changes have been brought in. We did see that in the finance bill recently in the budget. Virtual digital asset was incorporated as undeclared asset if it is found, right? So that was of course done in the finance bill, but this drastic overarching change has been brought in from a search and survey perspective to put all these issues of use of data in electronic form, whether evidence, not evidence, whether it can be used or not at rest. So this is what the law is now.
But the thing is that even in kind of famous cases, like say with Arvind Kejriwal and the ED, when Mr. Kejriwal did not share his password, the ED could not force him to do it. So here, under this law, can the income tax officials force you to share your password?
Yeah, because now this is very much in the law, and of course now I'm not an expert on digital protection law, whether it is in sync with it or not. But under specifically under this law, the amendments have been brought in, and by this, the taxpayer will be obliged to sort of provide that access to the tax office, and the tax officer who is doing any search or survey will be able to access that data and use such data as an evidence. Also, with this, they have brought in an amendment in the new income tax bill to say that any statement that is being given, now such statement being given has to be on oath. So till today, if search survey was being carried out, people used to take the revenue authorities used to take statements, but it was never on oath. So the taxpayers used to retract. They used to say that there was a lot of pressure on us, and under due pressure we had to provide this, but otherwise we don't agree with this statement. So now they have said that all the statements will be on oath. So now even the taxpayer will be obliged to give those statements on oath so that they cannot retract. So these are also very stringent measures which have been brought in.
I see. And now moving to some definitional things, they also, what they've done, they've introduced a concept of the tax year, and they've removed the concept of assessment year and previous year. So, could you tell us a little more about these?
Yeah. So, and again, this goes back to 1989, because earlier, we lot of taxpayers were using someone year as their accounting year. People used to follow April to March. People used to follow Jan to December. So everybody used to follow their own years. And there was a lot of confusion as to which year should be considered for the purpose of taxation. So at that time in 1989, they standardized everything and they said that the year in which you file your tax return is your assessment year, and that is the year basis which your income will be charged to tax and also assessed. Whereas the previous year was the year basis which the income which you have earned, you will file your tax return in the subsequent year, which is the assessment year. So there was a lot of people, people, as you're asking this question, people were confused. What is assessment year? When you should use the term previous year? So, and then internationally, globally also, multinational companies, they get confused when they are operating in India to understand this concept of assessment year, previous year. They don't have such terminologies globally as well. So to align our laws with global laws and also to simplify for our own people to understand easily, they have now done away with these two different terms, which is assessment year and previous year. And now and of course now everybody, we have financial year, which is standard for everybody, which is 1st April to 31st March, right? Yeah, even under various laws. So they have now said that it will be now one single term, which is tax year. The tax year is replacement of the term previous year, which is of course nothing but the same financial year for which you have earned the income and for which your income will be assessed to tax. So now no confusion, just one term, which is tax year, which is the relevant year in which you have earned the income and you will be assessed for income in that year. They have also gone ahead and said that tax year could be, it may not be a full financial year, because say you start your business on 1st August, right? And hence you may have the tax year may be less than 12 months, but it will still be from 1st August to 31st March, right? So they have clarified that as well. So they have sort of done away with all this ambiguities now.
Great. But on that note, I mean, this was an absolute masterclass on the new income tax bill, and hopefully, some of the concerns that you've raised, they will address them. But and also that the committee that has to review it, that hopefully they also look into these issues.
Yeah, no, you're right. And before we wrap up, it is important to understand because you mentioned these two important things. So there is repeals and savings provisions in the law. So whatever income that whatever losses that you have had, because this new law will come from 1st April 2026, assuming it comes or it is passed as an act. So till 31st March 2026, whatever losses you have, the losses that you can carry forward in this new bill, and it will be considered as it is. Whatever options that you have selected in this old law will automatically be embedded and taken as in the new law as well. You don't have to do anything. We should be looking forward to more rules coming in, right? We should be looking forward to, of course, a lot of representations, as you rightly said. So there is select committee. We don't know whether the bill will be passed in the next budget session after the break, or we also hear that it may get passed in the monsoon session because the time period for representation is too short if it has to pass in this budget session. So of course that will be wait and watch, but there will be a lot of representations on this, and as a result, there will be an outcome to it. Obviously, there will be as people start reading the law, there will be a lot of more surprises which will start coming in, and there would be kind of addressal to that as well. So that is, I think, also equally important to understand. But yes, on this note, at least we can say that there is no drastic change. So no bad news is also good news. There are some good news and there are some bad news as we are getting into niceties of it, as I explained. But beyond that, there is nothing. But we should gear up to see that income tax authorities will set up, will have to now change or do a drastic change in their IT systems to imbibe this new law. We should also look forward that this new law would ensure appropriate compliance, because the tax regime that now at least government seems to have adopted is to have a moderate tax regime, and hence they would want everybody to comply voluntarily. And obviously, as we spoke recently on search survey, a lot of other aspects, there will be a lot of enforcement. So we should gear up for due compliance, and if there is due compliance, we need not worry about enforcement. But otherwise, there could be enormous enforcement due to moderate tax regime, which also will come out because government has a lot of data, and they will do a lot of data analytics based on the new systems that they have been collecting, and that will also help them in enforcement. With that, yes, we look forward to see how this gets more implemented.
Great. Thank you so much. This has been fantastic. Thank you.
Thank you.